You're watching Trade of the Week with me and Taoleng Lechela. This week, the telco sector is up for analysis with blue label Telecoms, MTN and Telkom. Moxima Gama, senior technical analyst at the Money Hub, joins us with her analysis of these counters. Moxima, thank you so much for your time today.
Thank you for having me.
Yeah, you've been so bullish on the sector. I think this is the third time we're revisiting it.
Yes. Oh, you remember that. Nice one.
Yes.
So yeah, we are revisiting it again.
Okay.
Because there's just significant developments that have happened that and because sometimes you just want to check if you should still be in the sector or not. Yeah.
So would you say there's more upside? Because I see all those share prices are up double digits over the past year.
Yeah, and there's still some more that can happen because it's called a 100% retracement. Once they've broken out of long, you'll see with the charts that I show you.
Okay.
Then they kind of complete that mean reversion back to their all-time highs. We've seen it with many shares, so there is still a lot of upside potential. Just going through a bit of a specifically with blue going through a bit of a slump, but otherwise there still is. So in other words, this is to say that there is a reloading opportunity. You can buy more, because the whole thing about investing, right, is not just investing once and forgetting about it. It's to add more shares as you go along. So that's the whole purpose of this.
All right, then let's jump straight into it
Sure.
with the blue label. Of course, there was a whole lot of excitement last year with the spin-off of Cell C. That subsided, and as you mentioned, we did see a pullback in the share price.
Quite significantly so. So what I've done is just show you a bit of longer version of the chart, and then I zoom it in a little. But we're looking at blue label, and the first time we looked at it on the show was actually on February, the week of the 10th in 2025.
Okay.
And the reason why it caught my attention as much as it did is because it firstly broke out of a bear trend, and then it also, on top of that, also breached the upper slope of a bull channel. Now every time an upper slope is breached, a new phase starts and it becomes steeper.
Okay.
And so the 5.80 mark was the buying opportunity level. With potential upside, that's why I mentioned, and I said it would go up to 7.50, completely exceeded that, and it went up by 217%.
That run.
And that run was, there was a part where I was like, wait a minute, is this,
what's going on?
We need to slow it down. But then fundamentally they released something, but also just on a technical basis, something that goes as hard. We've seen it with gold and silver. Something that goes up as hard as it does, it tends to retrace with the same celerity.
Yep. What goes up
must go down and recalibrate, and then start a better sustainable trend. So we then saw it then pull back the way it did. I mean, it was quite a pullback. I'm still invested in blue label. I didn't really sell at that point in time. I didn't actually expect the pullback to be as much as it did, but it pulled back in a form of a wedge pattern. Now, wedge is a bullish continuation pattern. It's just a counter trend before resumption of the uptrend. So now, it also pulled back because it was so overbought for many months. That is just a key that, when the downside happens, it will happen quite drastically, especially when something's overbought for more than like 3 months or so, like how gold was overbought for 2 months, So on the weekly chart, that is. So it came, of course, it was overbought, which is justified, but it can go up another 103% if it meets certain conditions.
Okay, this is looking at
this is still blue label. So I'll just move on to the zoomed in version with that that falling wedge being shown. Now it's now consolidating, which is very typical of what happens. You'll see with gold, pull back, consolidation, move sideways for an extended period before it either falls again or rises, right? So the sideways pattern it's trading in is at 11 Rand and 9 Rand 30. That's where it's been at for some time now. So it's signs of a consolidation or consolidatory phase that once before I get to that 11 Rand mark, also important thing that I would suggest anyone who draws charts is to draw that trend line on the weekly RSI, the one I'm kind of currently showing, because once that RSI jumps back into bullish area right there, and you see blue label trade above 11 Rand, that then gives you the reloading opportunity.
So add more shares.
Add more shares around that point, because it would have done its drop, done its consolidation, but it's important that the RSI gets back into this bullish area. You see the RSI has been struggling for some time to get back, which just kind of indicates it's just an insinuation that it's still moving sideways. But once it trades about above 11 and the RSI gets back into the bullish area, we then see that resumption of the uptrend, where we could then see it go back to that 17.80 mark. Once it breaches that, hit its all-time high, 22 Rand 13. Now, the alternative scenario here comes in when it doesn't do that.
Okay.
So if it trades below 9.30 instead, it's time to actually just abandon the whole investment.
Where's it now? I think the last time it was 9.70.
Yeah, which is not too far from there. So it's really coiling between the 11 Rand and 9.30 mark that we just need to be careful about. We are a bit on tenterhooks. Once I do see that RSI come back up, I think there'll be a sigh of relief. But otherwise, I'm also willing to just can my investment at 9.30 if it should go, because from there onwards it could fall back to about 7.50, and that's now knowing deeply into your profits. So it's best to just to let go at 9.30.
All right. Is there anything significant that could happen to trigger that bullish trend? I mean, it does seem like things are quite down, have quietened down within the stable. No problem.
So the only significant thing is, I don't know if it continues to fall, is if there's any bad news that comes out.
Yeah.
I mean, the reason that it actually also fell the way it did is because it reported a loss for the first time, but it was a very marginal loss. But it was, in fact, it wasn't a loss. I think it was a profit, but not as compared to what they were reporting. So people became a bit despondent, or there was some pessimism that came in. So the sector seems to be doing well, unless they report something bad. I think there's more the opportunity of an upward break than a downward break.
Okay, shout out to the people that can actually read those figures, those numbers, because
I know.
Wow, one thing about Blue Label's earnings, you will sift through and ask yourself what's going on.
Where it's coming from. But you know, it's because they have this sell-C sticky position. Now they're selling it, now they're this. You know, it's that. But I think as an institution in itself, it's doing pretty good. From the little I know, I'm more technically based than fundamentally. Yeah.
All right, we can move on.
Let's move on. So okay, so the summary for this is getting at 11 with potential upside to 22 Rand 30, which this is gradual. I mean, don't think
it's going to happen in a month or something.
Gradual. Remember, it's just more of a long-term investment. Cool. So that's the reloading. But if it trades below 9.30, just get out. Now let's go to MTN, which has done something quite significant, which makes me believe that that is the reason why we're going to see the upside. And this is when a lot of the retailers are starting to come in. Okay. So with MTN, again, we spoke about it on the week of the 10th of February. And the motivation for that, our buying position or our buying point was at 905, 109.45. I was like, wait, that doesn't make sense. 109.45. And with the potential upside to 148.75, it's obviously exceeded that now.
I was about to say, because the last time I checked, it was close to 200.
Yeah, it's exceeded that now. So that was the call then, right? It's gone up by 82% since that time. So what is significant at this point is it's reached a very key trend line, which is dated back to September 2014. Now that's a momentous thing when something, a bear trend dated back that far is breached, because then it means that the whole long-term pessimism has now changed to optimism, also meaning that a lot of retailers are coming in. And what retailers do is they push the share price up, because now they see, oh, it's 2 Rand, I mean 20, it's 200 Rand, let's get more. So the clever money already got in whilst it was in the bear trend, but now breaking out is what could motivate more buying.
And is there no concern around that potential IHS?
Look, MTN has gone through a lot.
Fair, you know what? Fair.
It's been, I think the biggest one was the Nigeria, and they are stationed in really lucrative countries in the rest of Africa. I think a lot of the stuff there was the Iran story, there's a lot that they can shrug off, and sometimes when you look at sentiment, they're just looking for an appreciation in the share price and not necessarily news on anything, as long as that trend is intact.
Yeah, because it did dip slightly, but then it carried on.
It carried on, yeah, and when it dipped, I actually thought, oh, it's not getting out of its long-term bear trend. But now breaching that trend line is indicative that there is some appetite for it. Okay, so
another long-term
but this one I think will actually it could hit its all-time high this year, which means there's another 48% that we could experience if it meets certain conditions. And the conditions would then be if it trades above 199.13. So if I zoom it in a little, as you can see, this is the trend line over here. That's important. It's breached that, showing that there is a long-term change in sentiment, but its RSI is overbought, which says don't get in now because we can get it at a discount, right? The discount says you can get it around 178.40.
Okay.
So wait for it to pull back there. That's cheaper than getting it at 199.30, right? So If it bounces above that level, you should still get in. But effectively, once it trades above 199.30, we can then see further gains gradually towards the all-time high at 263.45. It may even exceed that.
Whoa.
Yeah. I mean, I'm sitting pretty with this investment. It's one of
like
those.
The upside there is
It's depend. I mean, we got
crazy.
in at 109. It's at 199. I mean, when I say we, I mean if you did get in alongside with me, that's big. And there is still some potential. I just say breaking through that trend line dated back to 2014. For a technical analysis, it's an exciting move. I mean, we're really excited by it, but we're like, yes,
Finally.
So, yeah. Something. But
All
then
right.
it's
if
also
that doesn't happen.
Yeah, if it doesn't happen and it starts trading below 178.40, it would mean it's a false break and reversal. And effectively, it could fall to the lower slope. If it trades above 160, it's time to get out. Unfortunately, it then means there was a failed, and it would mean a failed breakout as well as a breakout of its original uptrend that resulted in that infiltration through that trend line. So that's two bearish confluences that then constitute the fact that you need to actually get out.
All right.
So 160 is your cutoff point. Yeah.
Yes.
So so it would be getting in at any level above 178.40, potential upside to 263.45. But if it trades below 160, just cannot. Yeah.
Ooh, I'm looking at that 178, and you could possibly make close to 50% in returns. My goodness.
Guys,
all right. The telcos are sitting pretty, looking pretty, especially when looking at the technical picture.
Yeah.
Let's move over to Telkom then, right? They were out with a strong trading update yesterday. Data-led strategy seems to be, it seems to be working. And I think it's really one of the only SA Telecoms companies that's doing well in the home market.
Stood the weather of all sorts, like internal corruption, like all of that. It was really marred by that, but it's really held itself quite high in terms of that. And also breaking out of it. So we also spoke about it on the 10th.
Yes.
It broke out of its, the trend line, the bear trend there was one that dated back to 2019. So it was getting in, I know I've got there 35.45. I saw it when I was driving. I thought, no, the buying point was actually at 31.45.
31.45.
And that was because it confirmed that it officially broke out of that bear trend. So far, it then breached the upper slope. Upper slope means steeper upside. We saw that go up by 100% from the buying point, right? And then we could see further gains, another 67% rise if it meets certain conditions. Okay, and the conditions there is, it's broken out of a flag. And importantly, when it did pull back, it still bounced on this upper slope, which then means that there is still some buying momentum that's there. And as you can see, the RSI, it's not even overbought. So at 59.80, which means from next week onwards, if it trades above 59.80, that gives you a buying opportunity.
Okay.
Or a reloading, like I am going to potentially reload from there. Then we could see gains to 66.80, 83.40, and then 105, which is its all-time high. 105 cents.
105 cents from what?
So now we're going to get in. If we get in at 59.80,
okay,
there's potential upside to its all-time high, a mean reversion towards there, or rather a 100% retracement to its all-time high at 105 cents.
My goodness.
Yeah, that's a good, nice 50-something% there. Alternatively, you know, it's with technical analysis, we always say patience is key because you have to wait for the breakout. This thing of trying to get in early, or there's a reason why we say wait for a breakout, because it means there's a change in sentiment of some sort. If it doesn't do that, and it happens to encounter a lot of resistance and in fact pulls back below 55 and 10, it means don't reload.
Okay.
It could pull back to about 48.15. If it dips below 48.15 and starts trading below, that's a time to get out.
Okay.
Yeah, because you don't want to close the position break even now. You want to
you want to make some money.
Yeah. So how it would look is getting it at 59 with potential upside to 105 cents. So apologies, I had to change that if it goes to 48.15, that's the level that you should avoid getting into. So yeah, I guess if everyone's listening, 48.50 is where you should sell, actually.
Okay.
48.15, yeah.
Okay.
So if it trades below 55.10, then we're likely to see 48.15. If it breaches that, 44.10, but I would say get out of 48.15.
Just to be safe.
To be safe. So
Right.
that's the summary. Blue Label at 11, MTN at 109.45, and Telkom at 59.80.
59.80.
Yeah.
All right, and I guess that's...
And then the red part is get out. If it
Yeah.
goes below there, time to kill your investment. That means it won't. It will probably fall, but the chances of it then completing that would be a bit further than current. Yeah.
So maybe wait it out, and then you could go in when we see a reversal of that trend.
Yeah. But at least lock in your profits.
Aha.
Yeah, that's the whole purpose.
All right, let's leave it there, Moxima. Thank you so much for your time, and really appreciate that update on the telcos sector.
Yeah, stay in, unless, the red section gets breached, but I think we still have a lot of upside potential. Especially now because the platinums, well, let me not say platinum, but a lot of the metals have gone up so high. There is a repositioning that happens, because what's the next thing that will go up again? You find another sector. So that's how the whole structural...
Do you think then we're going to see maybe some momentum when it comes to other SA Inc. stocks?
Yes, like your properties, because we're at the cusp of the expansion phase of our economy, which means inflation is intact, interest rates are lower, we expect another two interest rate cuts. That puts, as I've mentioned, a lot of money in people's pockets. So your travel and tourism, your housing, all the other stuff, the only thing that seems to be lagging a little is the retail.
Yep.
So that one is a bit sticky, and I really thought that would be something that that would pick up once the interest rates have gone down sufficiently, but it seems to be lagging. But these are the ones these other sectors, I've got a list of them which I could send you, that seem to be, that seem as if they do well in 2026.
Okay, let's leave it there then, Moxima. Again, thank you. Really appreciate it.
Yes.
That was Moxima Gama, Senior Technical Analyst at the Money Hub. And that's all for this week's Trade of the Week. But stay tuned for lots more coming up right here on Business Day TV.